Hi, it's James here and welcome to the FXax channel, your #1 trading resource. As always, we will be providing transparent and informative content without the BS. Now today, I am going to be showing you guys how to trade breakout and retest strategies like an absolute pro. Many traders consider a breakout and retest strategy for signaling trade entries as the single most important factor to identify before entering a trade. So this is a video you're definitely going to want to rewind, watch again, and take notes, as this is a big concept to understand to help you guys get to the next level of your trading. Before we do begin, a disclaimer for you. Forex trading carries a high level of risk to your capital and you should only trade with money you can afford to lose. Our videos are for educational purposes only and delivered by a team with verified results. So please like, comment, and subscribe if you enjoy the content. Break and retest trading is the optimal way to jump in and catch the next big trend continuation move, and take advantage of when price action finally breaks out of consolidation. Some of the biggest moves captured in the Forex trading market happens when price breaks out of a zone or area. These strategies we show today work on any asset, any currency pair, but is best suited for the 1 hour time frame and higher. So how do you make sure you are there to get in on these major moves and bag those pips? Well, that is what we are going to show you in this video. So why trade the break and retest? Why not just trade the break? Well, many traders will trade the breakout of an area, as not all breakouts will retest and traders don't want to miss out on these breakout moves that can sometimes fly. These strategies are called breakout strategies, and they do have their place in trading. The thing to note is that breakout strategies leave the trader more exposed to potential fakeouts and whipsaws, so these are considered higher risk entries. Why many more experienced traders will wait for the retest after the break is because the retest helps confirm that price is actually holding at that level, and will likely continue in the direction of the breakout. Why many more experienced traders will wait for the retest after the break is because the retest helps confirm that price is actually holding at that level, and will likely continue in the direction of the breakout which you have identified. Waiting for the retest can also help traders get in at a better price than if they were just to trade the breakout. Here are a couple of examples of failed breakout trades. That is why it is safer to wait for the retest and a confirmed rejection. So without further ado, let's get into the first strategy, and that is for trend continuation. Now, trend continuation, break and retest, also known as the master pattern, the 1-2-3 pattern, the three-legged extension. This pattern goes by many names as this is one of the major patterns that many traders look for. There are a lot of traders who use this pattern as their bread and butter. Many traders base their entire trading careers off this simple break and retest strategy. So what is the 1-2-3 pattern? This pattern is highlighted for a bullish scenario by having higher highs and higher lows. Think of it as a sort of push-pull-push pattern. So a push up, then a pull back, then a third push up. That pushes price past the top of the first leg's push up. Here is how this pattern looks on the chart. See how price pushes up on the first leg, pulls back on the second, then the third push blows price past the top of the first leg. It is important to note the second leg, or the pullback leg, needs to have at least 2 bearish candles to be considered a proper pullback. The pullback also cannot go below the beginning of the first leg. And here is a bearish example. Same thing here. The first leg pushes down, the second leg pulls back up with at least 2 bullish candles, not higher than the first leg. Then the third push leg blows below the bottom of the first leg. Here is how that looks on a price chart. So that is the 1-2-3 master pattern, which signals a breakout. Let's take a look at where the retest comes into play and what makes this such a powerful pattern. The top of the first leg creates a resistance level, that price rejects and pulls back from. Then when the third leg pushes price, smashing through that resistance level, that same level now becomes support. So now all you have to do is wait for another pullback into that now turned support level, as shown by the dotted orange line, and look for price to reject off that area to the upside, continuing its upward trend. And a bearish example here. Let's take a look at some of these insanely powerful setups on the charts. See how price pushed up for the number 1 leg, then pulled back with at least 2 bear candles for the number 2 leg, then the number 3 leg pushed price strongly past the resistance line created by the first leg, turning it into support. Price then came back down after smashing that line to retest the area of support, and though it broke slightly below it, we think of support lines as areas of support, not exact lines. Then a clear rejection was signaled by a long-tailed pin bar, signaling seller weakness, giving us confidence for a buy entry, and then price continued upward. Here is another bullish example, and here is a bearish example. So this is just the opposite of the buy setup. Price pushes down for the first leg, then pulls back up with at least 2 bullish candles for the second leg or pullback leg. Then the third leg push breaks price below the support line, which now makes it a line of resistance. We wait for price to come back into that newly formed resistance line and for price to reject off of it. We see here 2 nice long wick rejections off the resistance area, giving us confidence in our sell entry for a massive winning trade. Here is another bearish sell example. The next example of this strategy is how we trade a break and retest out of a consolidation period. With the first strategy in this video, we showed you guys the master 1, 2, 3 pattern to jump in on a trend continuation. The fact is that markets consolidate 70% of the time and only trend 30% of the time. So it really is critical to be able to identify a consolidation period against a trending period so that you deploy the right strategy in the right market conditions. This method will help you identify when markets are about to go from consolidation to trend, allowing you to know when to jump in and make those huge trades. So, how do we identify an area of consolidation? Quite simple, really. If we consider an uptrend as forming higher highs and higher lows like this, and a downtrend as forming lower highs and lower lows like this, then a consolidation area is just an area where we cannot find these attributes. Think about a trending market as looking like a set of stairs. If the chart looked like the sideways view of stairs going up, that is an uptrend. Steps going down equals downtrend. If the chart does not look like a set of stairs, then chances are the markets are in consolidation. Now, consolidation is also often called sideways. You will often hear a trader referring to a sideways market, consolidating market, choppy, or ranging market. This is simply when we don't have the nice stair-step pattern going up or down, and the market is flat, sideways, or ranging. Here are some examples of what sideways, ranging, or consolidating markets look like. Notice how price is just going sideways, stuck between the upper and lower range highlighted by the green rectangle. This is where traders cannot make heads or tails of which direction the markets want to go. These consolidation areas are where most traders take their heaviest losses, as price in these areas is unpredictable, bouncing up and down like a kid who ate too much sugar on a trampoline, and price has plenty of whipsaws and fakeouts, causing many stop losses to get hit during this sideways price action. We definitely don't want to be trading in these areas unless you have a good reversal strategy, which we will cover in other videos. Here are 2 more examples of consolidated ranging sideways markets. Now that we are able to identify these consolidation ranges, where price is seemingly stuck between the top and bottom, patience is key here as we want to avoid placing trades while price is bouncing around like a pinball inside these zones. Here we are waiting for price to decisively break out of this consolidation zone, come back and retest, then reject, giving us clear confirmation that price is not likely to fall back in this zone. I'm going to show you a great example of where many breakout traders would have been caught here in what is known as a fakeout, resulting in a loss. Many traders play the break without waiting for a retest, And this example shows why we recommend waiting for the retest, as it is a safer way to trade. We can see price broke decisively out of the range, tricking many traders into thinking price is going to shoot upwards, only to have it drop straight back down into the consolidation range, likely taking out stop losses. Like every trading strategy, there are pros and cons to being less or more aggressive by waiting for the retest. You might miss out on some trades, but you will also save yourself from taking a lot of losses. I would rather miss trades and look for other opportunities if it means I can take fewer losses, which is why myself and many successful traders prefer the break and retest over the more gambling breakout approach. Instead of gambling on breakout trades, there are plenty of other opportunities and setups that will meet a trader's more conservative, safer approach. This is exactly why you will hear us mention patience a lot on this channel. So, how would a smarter trader have played this? Just by being a little bit more patient, we see that a trader could have waited for price to come back down, retest, and make a clear rejection from this range before placing their buy trades. Here are two excellent buy trades a trader could have made, leading to massive profits. Instead of chasing the initial breakout and getting caught in a fake out, let the price come back down and show clear signs of rejection with a sign such as a pin bar, a double bottom, tweezer or engulfing candlestick patterns, and then jump in as price now has a much higher probability of continuing in that direction. Here is another example, and we can see an example where a breakout trade circled in red that would have actually worked without a retest, and this shows why some traders like to play these breakout trades. As you see, this would have been a huge win. But statistically speaking, these do have higher failure rates than retest and rejection trades. While retest traders would have missed the initial breakout, we see they would have had 3 opportunities just after to enter the trade in a safer manner, still resulting in some nice pip gains. Here is a sell example. We can see the initial breakout again circled in red, which proved to be a false break, as price quickly reversed and came back into the consolidation area, likely resulting in a likely loss for breakout traders. For traders waiting for the retest and rejection of the area, there were 3 possible entry points, resulting in an absolute monster of a win. These are the types of trade setups that let traders quit their jobs and trade full-time. Just a couple more examples here. Now, here is another really cool thing you can do with break and retest, and that is not only using these with areas of support and resistance, but this also works with trend lines. Trend lines are an incredibly powerful tool, and you can also use this break and retest concept to look for some incredible reversal trades. I like using this with trend lines because, again, I'm lazy, guys. I want to do the least amount of chart analysis and markups possible. Once I have my trend lines drawn up, I don't want to have to keep continuously drawing new trend lines, finding new areas, and flipping through charts. So once I have my trend line drawn up for some awesome trend continuation trades like this, a really awesome and convenient thing you can do is just leave that trend line up on your chart for a while. See what happens when price approaches it. It will smash through your trend line eventually, but check this out. That same trend line I was using for my trend continuation buy trades, it also marked some grey areas for sells as price broke through it and came back up to retest it and rejected to the downside, giving me a great signal to enter a sell trade. Now, this is smart use of your trading tools, reutilizing your prior analysis, saving you time and effort in your trading. Here are a couple more examples. We have covered a lot of content in this video, guys, for you to take away. Go and find similar examples to this on your charts, plot them out, practice them, learn to identify them, and practice them on demo. Of course, we cherry-picked examples here to show you guys all winning trades as we are demonstrating a strategy. Of course, there will be times where these setups don't always hit take profits. There is no such thing as a strategy that wins 100% of the time. But this strategy paired with proper risk management is absolute fire. Setups such as these are used by many of the top traders in the world, and I personally know free funded traders who solely trade break and retest strategies, So this is definitely a strategy that you want in your toolkit. This brings us to this video's FXX tip. And I know you are probably thinking, how can we possibly provide more value to this vid? It is already packed with so much info. Well, you guys will hear a recurring theme in our videos, and that is to always use confluence. The more confluence, the better. The more signs that line up, the more powerful the strategy. And this strategy is no exception. The amazing thing about trade setups is they often follow patterns. Many of these break and retests also happen to line up with Fibonacci levels, moving averages, and even daily pivot points. So instead of just a break and retest off a trend line or support and resistance areas, why not also throw a fib level or moving average to add even more jet fuel to an already killer trade setup? Here are some examples of break and retest strategies paired with more confirmations for really killer trade setups. Here is a trade with a whopping 4 confluences as confirmation. We have price broke out of a consolidation range, coming back to retest and rejected off the support level. Price also rejected off a trend line, a 20 EMA, and the 50% Fibonacci level. Traders dream of setups like these. Being able to spot trade setups like this are what separate novices from the pros, and this one is huge. Feel free to pause the video here and get a feel for how we combine many different factors as we show you a few more examples. Here, price broke out of our trend line, then came back to retest the trend line and reject off of it, whilst also rejecting off the fib level and a support area for 3 confluence factors, adding as additional confirmations. Here are 3 more setups to look at. And that brings us to the end of this video, guys. Here at FXX, we are passionate about bringing you all the information, education, and content you need to help each of you reach your trading goals. Thank you so much for watching, and stay tuned for our future content. If you have not already done so, feel free to check out our newsletter, Telegram, and Instagram, where we post daily Forex analysis. All the links can be found in the description below.